Can you walk through what a tax write-off is? And if someone has an LLC, what types of things are business expenses and things that you can write off versus things that you can't?
That's a great one. So it's one of, I think it probably should have been the first topic because that's what gets to lower your taxes, right? Both either in the US or in your home country where you are. But okay, so tax write-off, if we are using the Title 26, which is the Internal Revenue Code, it says that you can write off whatever is ordinary, necessary, and ordinary necessary towards the production of the kind of income you're making. Okay, so if it's ordinary and necessary, then whenever you're spending money, you need to ask yourself, why am I spending this money? What is it for? Right? So if I pay StartPack to set up my LLC for me, then I have to ask myself, what kind of expenses is this? Is this really important for my business? And if it is, if the question is yes, then you can deduct it, right? So we know that it's one of the first things you have to do is to set up your LLC. You have to pay someone to do that. That's ordinary and necessary expenses. And so you can deduct that. Let's say you're paying people from all over the world, maybe paying contractors. The moment you make that payment, ask yourself, why am I making this payment? Okay, to pay these contractors. And what are they going to do? To help my company to succeed, okay? If they're helping your company to succeed, or they are helping your company to basically further whatever cost the company was set up for and to make the kind of income you're making, then it is deductible, okay? Now, there are certain things that you cannot deduct completely. In every general rule, there's an exception. There's things like when you buy a car, it can be depreciated, or you could get a Section 179 deduction that you can check into. If you buy meals is 50%, unless the meal is served in a restaurant. When you go and sit in the restaurant and there's business being conducted, then it's 100%. But if you order, take away and, your stuff like that, those are 50% when you're using the US tax code. And entertainment, you entertain people, that is no longer deductible. So we'll give you the general rules, but then we'll carve out exceptions for you, right? But the general rule is that for expenses to be a write-off or deductible, it has to be necessary and ordinary for the kind of work your company is engaging, and it has to also be supporting the kind of income that you're trying to bring in. Even if you don't bring in income and you make losses, it's fine. We know you're trying. The purpose for those expenses is that you're trying to make income, right? So it's fine to make losses, but you need to make sure that what you're doing is ordinary, necessary, and connected to the business as far as producing the income is concerned. And also, I know that most taxpayers I've seen have a tendency of commingling or, using business account for personal expenses. They go on vacation and they swipe. At that point, you need to ask yourself, is this really business or is it really personal, right? So anytime you're spending money is going out, ask yourself why that money is being spent and for what purpose.